Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino, who will be on this afternoon. How is everyone doing? Good morning, Lauren. Good morning, Davey. Good morning, Patrick. Happy Tuesday, Connor. Good morning, Eric. Good morning, Wavy. Well, they got Kathy back on CNBC. She finally says we're in a recession. Talk about perfect timing. I might almost agree with her about that only one thing ever. I think we're right at the edge. Uh Hello, Lauren. Good morning, Mr. Arnold. Oh boy. At least it's not Mr. Anderson. That would be bad. Good morning, Ted. Good morning, afternoon, Christoph from overseas. Thank you for being here. What'd you think of the ECB chat? They're going all after that super high inflation with that 25 basis point hike in July. Woo! Wow. Then we had some numbers come out this morning, and we'll get to that in a second. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. I'm going to make another call out to my live viewers to come back after when it quiets down after the open and just leave some comments. We need to keep boosting that and like the videos. All right. And we had Fed speak this morning, which wasn't on my radar. Oh, boy. Coco, we just looked at that yesterday. He's wanting Oxy again. So we had let me get to the other camera here. We had the retail inventories, the trade balance. That was minor, but retail inventories ex auto came in at 0.8. Wholesale inventories 2. What were they expecting? And they don't have retail inventories not ex auto. I'm looking over at my other news feed. 1.1 coming in, expected 1.6. So that was a miss. But beating last at 0.7. Wholesale inventories 2 as shown, but expectations was 2.1, the last 2.2. Not much movement over that. Red Book coming down a little bit. House price index month over month coming in as expected. This is back from April data. So year over year coming down a little. But remember, this is old. This is data, April data, by the way. Big number coming out at 9, consumer confidence. And then I'm really keying an eye because we saw the Dallas numbers come out yesterday. Now we have Richmond. All right, especially the manufacturing index. I want to see how, if this is still in contraction. If it is, how it relates to the other things. So that could be big. And services to see if that starts going down towards contraction. And we have Dallas Fed services at 9:30 Central. So, and then we got Daly speaking, and we've already had Williams speaking, just looking over at my other news feed. And I don't understand this. Fed's Williams, the economy is strong and financial conditions have tightened, yet I expect GDP to grow 1 to 1.5% for the year. That's not a super strong economy. That's not strong. That's like lukewarm at best. I don't know. I don't get it. I just don't get it. Good morning, Sashi. Good morning, Anissa. And they want to keep Italian, Spanish, etc. yields low compared to German. I don't know how they're going to do that because if they have to start buying Italian bonds, they either have to start selling other stuff unless they're going to expand their balance sheet again. But they said they were going to start not expand their balance sheet, so that means they either have to let stuff run off if it's close to expiration, or they have to actively sell stuff in order to buy the Italian Spanish bonds. So that's going to get super easy. By the way, I'm responding to Christoph's comment here because it's a mess. This is why it's not going to work long term, because you have two very different economic styles in the EU, I should say. Better than beer? Does that just sum up what we're living in? Arrest made after woman shot killed Subway over too much mayo? Really? I mean, is that the world we're in right now? There's too much mayo. Just have them remake your sandwich. I mean, come on. Hello, options 22. Fed Williams keeps lying. We have We have, this is just, even if I don't feel like doing a live stream in the morning, this is why I do it. By the way, the pre-market stuff is pretty just mixed except for oil. Oil's up big. It's going to watch for a potential topping pattern again. But we got that bounce back into the daily rotation zone. FOMC still. Williams said the debate was also going to be between the 50 and the 75 basis point. I'm still thinking 75 basis points based off what everybody else is saying, and so does the Fed Watch tool. By the way, the other site, they are having an issue, but this is the SPX, SPY combined gamma, and you see it's almost out of negative gamma territory. So keep that in mind. We're losing a lot of gamma juice. There's still a little more in the futures, but the SPX, SPY combined is nearly out of gamma juice going into quarter end. Earnings, well, just get out of here. There we go. Going into earnings, again, nothing major this morning. Nike did not have good numbers yesterday, by the way. Well, they're not really flip-flopping. I still think they're going after inflation very strong. It's just I don't understand. And he's just talking about the unemployment rate ticking over 4. So I guess it's all just a word salad with, yeah, unemployment's going to go up, but we have really tight labor conditions, but we're going to have a soft landing and everything's going to be hunky-dory, I think there's just a bunch of lip service right now. Loving crude right now, got a swing entry at 107, running trailing stop. Yeah, I would agree with running a trailing stop. We got that %B buy a couple days ago and into that rotation zone. Oh, I'm not even going to put up your comment. I'm not going to put some of these up. Let's see, Christoph. 15 years ago in university, I learned that today's euro area isn't satisfying the preconditions for a functioning monetary union. Now we have to live with the consequences. Yeah, exactly. If anybody thinks we're going to hit a soft bottom, I think they're delusional still. By the way, in the quarter end, remember, coming up Thursday, cycle's still trying to run up on the daily basis. So not yet fully topping. On the 4-hour basis now running up. Daily is topping but not yet rolling over, and this is still a sideways correction. So we're still in tactical trading mode. I am bumping this down a little for intraday price action. Why here? Because we had emotional candle close right here, and we've retested it with the overnight price action from that low, and that's my area. You see, we've tried to rotate back up, got the close above the defining point on the 4-hour and stalling out there. So in order for me to get bearish intraday, other than a minor pullback level, minor breakdown on the open, which my key area is about 38.88. Again, that's an area. We start breaking below that. We're into a clear path move. I will watch the bottom of the 4-hour rotation zone with the 25% harmonic, 38.70. And then the next, if we really, minor would be about 38.50. Then major is running into about 38.32 to about 38.37. And there's this little stopping area right there. So that's if it was Tank It Tuesday. To the upside, short term, based off the open, about 39.27 above there. And then if it can run and sustain, you start getting into advanced clear path. So then I'm targeting the 39.45 areas. And above 39.45, 39.54, then major target is 39.90 on a strong breakout play. That's the 62.5 level. NASDAQ, again, this still qualifies as a sideways correction. This potential double is off the table with this stair-step down move. You can really see it on the 1 hour. Key area I'm watching for the breakdown play is right around this harmonic, just below it slightly. You see this little shelf right here, just below the harmonic. If you want to give it a little more room, it's about, I just go off 12,000. 12,003 in the NASDAQ versus 12,000 is nothing. But then you're into this little clear path move. and your key breakout level would be about 11,854. Let's see how that plays in. So your minor first stopping area I'd be watching is this emotional candle close with the rising 4-hour rotation zone, which is about 11,950. And then I'd be targeting 11,854. To the upside, I need a pretty decent break, hopefully a break and a retest and a rotation back up above about 12,000. I go about 120, and then you're into an advanced clear path move to the most recent high area. First area I'd be keying off of is about 12,238. And then here's a great area for minor. If we stay upwards and choppy, it would be, here's where I love to use the reverse harmonics and the intermediate level, 12,298. So 12,3 would be stop, and then 12,334 would be a nice little target area. So there's my downside and upside there. The Dow, by the way, has a little potential double top. So this is a really nice pattern. If we do break down 31,310, then we have 31,117, 31,21, and major 39,24. And this, you have this little flat area, but then you go into a simple clear path move. So that's the downside. To the upside, got to anchor the reverse harmonics on that area. So we start breaking above about 31,620. Retest the highs in 31,743, 31,791, and then the next substantial level would be 31,904. Morning, Mike. Is June 29th the Q2 GDP, or is that another day? It's Q1 it's the final revision to Q1, George. So it's still Q1, and you'll see it at 1.5, and that is tomorrow. As what was Anissa last night helped me when in my moment of confusion, forgetting what day it was. Anissa helping me with the 29th, but that is Q1 still. Yeah, Q2 starts coming out in July. I think it is next week. So or I'll have to look that up longer term, but you can just do a search for that. So now that's a nice play. And also, if you see this in the Dow, even if you don't trade anything with the Dow, if you see this trigger, start watching for the potential bigger pullbacks. Let's just jump to the VIX real quick. The VIX still holding at this key low. So if we start seeing some acceleration, there is a clear path move down here, and the technical analysis still does work. So on the open, if I start seeing a break below, especially the 20-second low coming in at 2683 area, we start accelerating down. That's where I'll start really targeting the upside. It might be choppy to the upside, but the upside price action. If this holds, if this little holds, I'm going to watch. You do have a potential double bottom here, okay? So if this holds and we start edging above the 1 hour rotation zone, I'll start watching for a potential double bottom trigger and a pullback, especially with daily cycles at the top. That's why I wanted to jump to the VIX real quick. And why am I hesitant just going super aggressively short at this? Because of, again, quarter end with window dressing can throw a monkey wrench into things so far. Oh, by the way, Russell still nicely climbing higher, albeit slowly. So, and that is still in the clear path move. And my next major target is the gap fill on a continued push higher, which is roughly 1,800. It's technically 1,860 cents, but it's 1,800. And then 1,815. The pullback area, minors about 1,770, majors back down to about 1,755 to 1,752. The DAX also on the 4 hour now has a really nice potential double top pattern. So that's what I'll be watching for in Europe to see if that breaks down. And there's a fair amount of resistance up here. But if it does break through this, you have essentially back with this. So this isn't a triple top pattern right here because it's reversing this, but you have three tops in that same vicinity against that 50 EMA on the 4-hour. So we start getting above about 13,375. You're into the rest of a single candle clear path with the target being about 13.5. Crude, which we did get on the daily back here, was a percent B buy pattern and running up to the other end of the rotation zone and back to the harmonic level. So again, who do we have? We had wavy, long, crude. So this is, again, I completely agree. This is where you move up your stop. Completely agree with this. And depending on when you got in, I mean, I wouldn't hug it just here, but if you're more aggressive to get out, you start breaking below 110 to 110.30, you can watch for the slightly bigger pullback. But the major area, if you haven't unwound, and this is also where, since we are against the daily rotation zone, what I like to do also, along with trail a stop, is unwind a partial position, keep something on, then I can give a slightly bigger stop, though not risking anything below break even. But you can give it a slightly bigger stop, and my slightly bigger stop on a key closing basis is around 109.50 for that. Natural gas did trigger the aggressive buy yesterday. Again, aggressive because it's against the daily rotation zone. So it's managing a tight position there, but trying to put in at least a short-term bottoming pattern with cycles rolling up. But again, the targets wouldn't be beyond anything beyond the rotation zone, and it's definitely start moving up a stop if it does tap this key open. Remember, we have close, right higher, and the key open, and then the runaway candle with the rotation zone. So that is a great area to move up a stop. Gold, nothing. Silver, nothing. Copper still hasn't put in the buy pattern yet, so keeping an eye on that, but that would just be a very aggressive short-term buy. It's actually going to wear off its trigger pretty soon. Notes, again, we got the continued pullback in this little channel pattern, coming back down. If we do spike lower, we are against this see this prior resistance becoming support. But we have a pretty substantial with the 50% retracement of this run-up area. So this is a pretty substantial level. And if we did break below that, you know my line in the sand is 115.24. But I'm watching for a bullish reversal. And I'd actually tighten this up and use a best fit line for, that's not a proper trend line. That is considered a best fit line, because it's ignoring these highs, but it's really hugging here right now. So that's my early warning, especially above about 116.30, 132 area for a rotation play back up. Dollar index holding the 50% really nicely and getting a rotation back up. And remember, close above yesterday's high on a daily closing basis is a rotation entry back up, holding the daily rotation zone. Holding the weekly rotation zone, you see here with that 50% harmonic weekly. This is why we look at our multiple time frames and rotation back up. Now that would just be for a retest of this high area initially to move up stops, but that would also turn this double into a fully functional triple top, which is more of a continuation pattern. 10-year still, I mean, what did I said yesterday that they now own over 50, I think it's technically 50.2% of the Japanese government bond market, their central bank. Keep an eye on Swissy, by the way, for anybody who trades FX. It's confirmed this double top, but not triggered on a closing basis, and I need it to trigger on at least a daily closing basis. But that could be a very nice pattern, especially down to that first target, because you can keep a tighter stop. This is a double pattern that you can keep a tighter stop on. Bitcoin, not much going on. Tether is still having some major issues, and I'm expecting that to unravel sooner than later, but I could get a saving push if we do get another push higher quarter end with the NASDAQ, but nothing to do in there. Tesla, again, pre-market, pretty flat. First target hit, so stop reduction. And the next target still higher, 760, 778, 77. Key support now. Key support coming in about 723, and then major support about 706. And by the way, I think this is nearly off the table, the potential double with that push higher. Let me get to the Qs real quick. The Qs, not much has changed since yesterday. Here's where we got the little bigger pausing area on the 4 hour. So this is a really good now. Instead of this was not a pausing on a longer term chart. So you want to ratchet up the harmonics because that will give you better levels. And also if you want the lower levels, if we do move up, you'll want to re-anchor your reverse harmonics if this low holds from yesterday. But I'm going to give you the major levels now, which is the gap fill to 29.99. So you got the gap fill and then 29.99. Your key support, if you do break down, like I talked about the futures, you have some clear path here. You can see it if you start breaking down, especially below about 291. Then miners about 289.75, and then I'd be watching for this low, and then you got a gap fill. So those are all your down and upside plays. And you could return to the first cross of the rotation zone. I'll get back to comments in a second. I'm just trying to get through some of this. Spiders major are about 384, and again, because you now have the bigger pause pullback, we got to update the harmonics. Those were the short-term ones, but that takes us essentially to this key gap open. So on the push higher in the spiders, 394.98, and the key gap open, 394.88. So there's a wonderful target area if it keeps going with that. Let's see. Where do we sit? Tesla breakout today. Still, if the NASDAQ starts running or the S&P starts running higher, I'm still watching for those double pattern to complete for the upside. Is it Elon's birthday? Did not know that. I don't follow that closely. When will this rally end? Are we having super green weeks like in early May? Well, I'm watching for the continued push higher through the quarter end, and then things to reassess in early July. Hi, Mike. If Mr. Anderson is here, I will be back. No, you wait for. I went through again. Start shorting now? No. I gave you the breakdown play. I said into this clear path. I gave you the breakdown levels. You don't have, because again, remember yesterday, this is still a sideways correction going into quarter end. And even on a breakdown play, it could then just be a return to, into some of the support. So would I be aggressively shorting? No. You start getting below the 4 hour rotation zone and some of these key levels I mentioned earlier, then it's a shorter term short. It's a tactical short. Why? Because you still have quarter end coming up. So no, this is not just shorting. You're welcome. There's not much to talk about with Hood since it's a potential takeover candidate. So that's going to be either, it's potential. I don't know if it will go through. But now you're trading a news cycle stock, which is a potential takeover candidate. Longer term, if it does pop up, continued, your levels are about 1069 to about 12. But again, if this remains a potential takeover candidate, it's going to get propped up. It's against key resistance right now on a closing basis. You see right here. But it's going to be just trading it intraday based off of, all right, if it comes out with FTX, we're not interested anymore. It rolls over. You got cycles at the top. So I'd be very careful for a potential another rollover play. Euro FX, please. You want just the... I'm not going to do the futures then. Why does that happen? It starts putting a 1 in there all the time. It started yesterday. Euro, the only still potential thing, we do have a potential double bottom still on the longer term basis. On the shorter term basis, it's either a breakout or breakdown play. The breakout play, about 105.80. Okay, because then you're in a clear path move. But again, that's a tight play because you definitely have to raise a stop around 106.50. All right, so that's definitely because you're into a clear path, but here's the breakdown zone right there. And then the breakdown play, your early warning is about 105.20. The major one is about 104.90. So if I was playing an early warning one, I'd have to get then a daily close below those levels in order to keep trying to run it back down, and a preferable daily close would be about below 105.20. Because then you're into this sort of retest area of the lows, and then this double becomes an official triple. So those are your short and long-term plays in the euro. Then I got to wrap this up. Aussie, New Zealand. Yeah, that actually you can that's a double pattern right there. If it closes, I'd watch for that daily close to sustain, but that's an easy double pattern. 110.90, 111, and then 111.15, then 111.37. Complete. That is a pretty much a textbook double with cycles going up to the top, so this could easily run up to retest as high areas. There you go. Good morning, Amit. AB, thank you for putting that in. Happy disciplined trading, everyone. Remember, if you don't have a setup, you don't have to trade. Good luck, everyone. Again, I go off not good luck, but happy disciplined trading. Manage risk first. Let reward take care of itself. Use the levels. You are welcome, Anissa. You are welcome, Eric. And I will chat with everyone later. Have a wonderful, wonderful trading day. Bye for now. You are welcome, Connor.